Ladies and gentlemen, welcome to our last webinar in this series on how to analyze your China business. We have had 4 wonderful days where we've been basically reviewing how to analyze your business in China, all the way from just strategic tactics on how to analyze your business from each core function, all the way through to yesterday's discussion on one of the biggest growth obstacles, which is really the communication between head office and China subsidiary. And today I just want to finish off summing up what I see amongst foreign investors as the biggest or the 10 most common leadership traits that cause a company in China to fail. There's not so many people online today, so I'm going to skip the part about startup in China or experience China hand. But if you do want to actually interact, please do let me know a little bit about your background so I have some understanding. And especially if you want to hop on a call at the end of today's session or early next week, let me know as well. To the next slide. How the webinars work is that just from a technical point, we're using Zoom meeting. If I get kicked off of the system because of Wi-Fi issues, it usually does take about 90 seconds to 2 minutes for me to pop back on. I will be coming on again to finish today's presentation, so just be patient. If you are having technical issues where a couple of people I saw yesterday were kind of trying to log in and then were kicked off the system, try logging on and off a couple of times. Just know we are recording today's session, so in the end of the day, if you get kicked off the system and you can't get back on, just know you can look at the recording. It's going to be posted by the end of today. This is an education session, so I'm here to educate you on my findings about really what are the top 10 mistakes that companies make going into China. If you've got any questions or you have any stories you want to share, by all means, type them in. You can also, because there's only 2 of you today, you can also interject me at any point. Just unmute yourselves and ask a question, raise your hand. Happy to answer you. So for those of you that are new, just a bit of background, and this is something because it's going up on YouTube, I have to repeat myself consistently on. My name is Christina Kohler-Colucci. I'm the head of business advisory at Woodburn Accountants and Advisors. I'm a leading expert in China on inbound investment. 100% of my clients are foreign investors, all coming from Anglo-Saxon countries like the United States, Canada, UK, Australia. And then I also have clientele in the mainland Europe region. So Germany, France, Scandinavian countries, etc. And what I do is I bring them on their China journey. So everything from pre-investment advisory all the way to the incorporation or implementation of their business model, all the way through to outsourced solutions that can be offered to them. And it doesn't matter whether you are actually incorporating an entity or not. The traits that I'm going to be talking about today are obstacles that I see even for companies that are simply transacting with China. So whether you're just transacting from your head office or you actually have an entity on the ground that's fully operational, these are 10 traits that I've gone through, that I've seen my clients gone through, and that I hope today you will learn from. So the title of today's session is 10 Reasons Why Some Businesses Are Not Successful in the Chinese Market. Ji Hong joined yesterday's session, and the biggest highlight, I think, for anybody that was on that session was the communication issues that are created between the China subsidiary and the headquarters can lead to so many issues down the line and can create real roadblocks for an organization to grow in the Chinese market. Communication is fundamental, but it also leads to so many other areas. And many of the traits that I'm going to be talking on today were actually talked about in yesterday's presentation. And I just want to put them in a structured format for you to understand what is actually occurring between the goals of the China subsidiary and the goals of the organization in the head office. So there are 10 traits all the way from the start: refusal to adapt, too much, too little involvement in the detail, insufficient care when hiring people on the ground, number blindness, market assumptions, control freak leadership, which I'm guilty of, marketing bias, cultural diversity, lack of vision, and fear. And we're going to be touching on all of these points today. So let's get cracking with reason number one, or trait number one, refusal to adapt. And in yesterday's presentation, I highlighted a personal war story that happened within my own organization back in 2003. And it's not just with me, it happens with everybody. Refusal to adapt to what is happening on the ground in China. And when I talk about this, it can be everything ranging from legal documents, which is what my personal war story was, all the way through technical specifications on products, all the way to differentiating your marketing campaigns so it's culturally respective in the country that you're now entering into. And there's a full range of things in addition to that. You know, it's also, how do you treat employees? How do you speak to employees? How do you understand the cultural nuances that are occurring in the Chinese market? Now, obviously, when I speak to a lot of small, medium-sized companies, and these can be production companies, engineering companies, service-oriented companies, whatever it might be, their philosophy is, if it ain't broke, don't fix it, okay? My philosophy is improvements can always be made. And adaptation has to occur in the Chinese market. You have no choice around this, all right? So one of the things that I did as a mistake early on was contracts. We were taking contract templates from our head office in Hong Kong, which, you know, back in the day, our thought process was Hong Kong is part of China. There can't be that many discrepancies, but in reality, it's two separate legal systems. So you've got to take that into account. And whether it's Hong Kong, UK, US, Canada, Australia, Germany, it's two separate legal systems. You cannot take a document that you have in the UK and expect that you can take that into the Chinese market and not make any changes to it. If you've got employment contract templates in the UK, by all means, take those and adapt them to the Chinese market. If you're looking at products, so I've got a case, a potential client who's looking at entering the Chinese market. And I said, you know, with your product, which is in the food and beverage category, have you actually done focus groups, tastings? Do people like the flavors? Do people like just generally the product? And they had never thought about doing this. And actually the outcome of that one focus group was that the product, amazing, fantastic. Packaging, disaster. Nobody would have actually taken the product off of the shelf because of the way that the product was packaged. So doing things in your market research stage to know how you should be adapting your product, adapting your service, understanding that templates that you're utilizing in your home jurisdiction have to be adapted. Now, many of you are going to say, well, yeah, that just makes common sense, right? But for some reason, when people are going into the Chinese market, there is a complete loss of common sense. It's already such a complex market that in all of the administrative areas or market research areas, they don't place focus. They miss out on doing specific types of research. They want to take the easy way out. And it is so common, okay? I know that on these webinars, when I'm talking, a lot of things are like, yeah, of course we're going to do it like that. Why wouldn't we adapt? But when it comes to the physical entry, you forget to do it. And it has to be a consistent reminder. So make sure that in all areas of your business, in all departments, you realize that there has to be a cultural adaptation, a strategic adaptation that has to occur in the Chinese market. Reason number two is too much or too little involvement in the detail. And I'd like to highlight this basically as a journey that I see in almost 95% of the companies that I meet with. A lot of attention is paid at the beginning because there's so much excitement. We're going into China, we're going to create a business model, we're writing up our strategy, we're starting to gain traction and transactions are starting. You know, we're going to focus on this, and there's so much involvement that it goes into the nitty-gritty details. One of the things that was highlighted in yesterday's conversation by a GM based in China was the fact that headquarters have this tendency to work on the business instead of in the business, meaning that they're so fixated on having a written strategy, a written business plan, going through the numbers from left to right, up to down, down to up, right to left, that in the end of the day, there's no action taking place, right? You're so involved in the nitty-gritty details of getting the paperwork done, the administration done, and all that, which is a must, but there's no actual execution. So you can create operational guidelines. You can go ahead and create the documents to actually be submitted for your company and corporation. You can go through your financials, but when there is no actual execution, what's the point in doing all of that work? Okay? Action is a big requirement in such a fast-paced market in China. Don't dilly-daddle in the head office saying we've got to analyze, we got to do, at some point, action has to occur. And this is the dilemma that Jürgen was explaining in yesterday's presentation, which I thought was brilliant, where he said, you know, I'm sitting on the ground in China. I need to take action. If I don't, I'm going to lose out on bids. Yes, it's going to be trial and error. But if we don't take action, we'll never know if it's a success or if it's a failure. And even if it's a failure, we scrap it, we start again, and we'll find another action point that we have to take and do. Because you're in a fast-paced market where you have to be quick and pivot your business as quickly as possible. And the trend in Europe is not like that. You know, there are situations where you won't get your email answered for a month, right? Things are working on a much slower pace. And there's so much analysis and fine-tuning that has to occur that prevents people from getting actually executed and taking action in the Chinese market. Too little involvement comes from then the opposite side of the coin, where companies are well established, transactions are occurring, analysis has happened, and then suddenly they take 2 steps back and they're like, yeah, my priority isn't China anymore. It's just working. I'm going to focus on something else. Okay. In situations like that, when you take too little involvement, you're leaving your office, your team, your people, your third-party suppliers, your customers out in the wind. All right. Being that China is a fast-paced market, you need to be able to react quickly. If you're not involved in that daily business, again, things are not going to progress, because probably you have a sequential hierarchy within your organization where approvals have to be made. And if you don't react quickly because you're not involved in the China business, and then suddenly you need to have 5 meetings in a row to get explanations on what's actually going on, you're going to lose the momentum. So there really needs to be this balance between too much, too little involvement, and having this synced goal between China and your head office about execution, action, taking that action, all right? Nobody wants to lose money in China. I think we're all in agreement with that. The issue is that what we want to achieve is momentum, consistency, and not to lose out on any potential business that might be coming in, even if there's been zero analysis work that's been done behind it, all right? There has to be this reactive and proactive mentality that's occurring. Reason number 3 is insufficient care when hiring. And I'm guilty of this. And I don't know a single company that hasn't been guilty of this. We all know this in the Western world, whether you have your company based in the US, Canada, in the Middle East, wherever, a business is only good as its people. And as I was highlighting yesterday, you can't go into China alone. You need help. You need to build this ecosystem of individuals that are going to help you to grow your business. And that can come from employees, it can come from third parties, whomever, okay? And when I'm talking about insufficient care when hiring, I am focusing more on employees, but it's also relatable to third parties, okay? Do your employees have the talent, the creativity, the inclination, the proactiveness to take your business forward? Or are they individuals, which is the tendency in China, to be reactive and to follow the orders of their line managers. If you only have employees sitting there waiting for orders to be sent to them to say what actions to take and not doing things proactively, saying, hey guys, this is such a terrible idea. And I'll tell you and explain to you why it's a terrible idea. Or staff members coming, hey guys, why haven't we actually thought about this new marketing campaign, this new marketing channel that's available, all right? You need to have employees on the ground that are seeing the market, that are in the market, that are feeling the market, to be able to report back to you and have the same goal as you to push this company forward, all right? There's no point having these individuals sitting there that are just completely reactive, okay? Now in China, due to the education system, you will find a lot of employees that have come out and graduated with this in-the-box mentality. You need to find those rare gems that have the out-of-the-box thinking, all right, that are going to be observing the market and looking at the market and proactively coming to you when they see red flags, when they've got new ideas, when they've got warning signs, when they say that a third party is not doing their job responsibly enough. You want somebody that has this proactiveness towards your organization, okay? And it's exactly the same concept when you're looking at third parties. When you're looking at suppliers that might be catering to your business, when you're looking or you're outsourcing your accounting, you want to have an accountant that's proactive with you, okay? So evaluating your team and the ecosystem that you have on the ground is vital to growing your business forward. One of the biggest mistakes that I made in my own organization in the first, I would say probably 5-6 years, was that I had a fear of rocking the boat. I had a fear of letting go of employees and getting a bad reputation amongst clients because I would have such high turnover. So I never let go of the bad eggs. I just kept them on, reduced their responsibilities, but paid the same amount of salaries, right? And it was just because I had this fear of not rocking the boat. If you don't have the right talent in your own organization, don't keep them. It's no point. One of the tips that I can offer you today is I have a backlog, not backlog, but I have a folder of resumes that I keep up to date in case I have to let go of a bad egg. I have a backup plan. I know who to call because I like the resumes, and maybe I've already spoken to them in the past. I just haven't had a spot to bring them in, right? So having this backup of individuals that, you know, is continuously updated in case you do have to move talent. I always tell my clients, if you're working with media agencies, have a backup media agency in mind. You know, you're probably going to do your benchmarking and talk to 3, 4, 5 different media agencies. If you're going to appoint one, if they're not doing the job that you're expecting them to do, or they're not reaching the KPIs you expect them to have reached within 6 months or 1 year, change them. Don't keep them, okay? Again, we are an extremely fast-paced market where this type of analysis has to be quick and you've got to pivot quickly. So making sure you've got that backup of that second best media agency that you interviewed in mind to say, hey, listen, we're thinking of terminating our current one because of XYZ issues. We're thinking of switching to you. Can you offer us a better proposal? And we want to switch in the next 2 months. Can you handle us? Right? So again, having this key ecosystem on the ground to support your business, to grow your business, is a foundation to your growth, right? And I'm hopefully, with the other reasons, the other 7 reasons I'll be sharing today, I'll provide you with a couple of tips on how to prevent turnover when you're talking to third parties or when you're talking to your own employees. There are no questions so far, but if you do have questions that you want to share, please do insert them into the chat box, all right? Reason number 4 is number blindness. And I mean, obviously because of the profession that I'm in, this is daily, okay? And again, you might all be saying, what? Companies have number blindness? What do you mean? They're not reading their financials? No, they're not. It's as simple as that, all right? So It's not happening so much in our organization because we've implemented systems with our clients to not allow them the opportunity to not read their financials. But if you are outsourcing to a accounting firm, or you have your own in-house accounting team, I see laziness amongst management to not analyze their financials. I have had companies who have not read their China financials in over 3 years because they only receive them in Chinese. And they don't take this proactive view of saying, I want them in English, give them to me in English, right? Or saying, you know what, they're not giving it to me in English, I'll get them translated myself. How much is it literally going to cost to translate a P&L and a balance sheet, guys? Not much, okay? If you're not reading your financials, how can you actually make decisions? Now, when you are in China, and I was highlighting this on Wednesday about how to analyze financial management reports, China does have a very different accounting system. I call it, it's not the official term, but this is how it makes it easier for me to explain it to people, is that in China, you have the Fapiao accounting system. Fapiao is the official invoice that basically dictates how you are doing your accounts, okay? And it all comes down to when you issue Fapiaos, when you receive Fapiaos from your suppliers. So many times the Chinese accounting or the Chinese financial management reports that are submitted to the tax bureaus and to the banks, they won't show the true reflection of your organization, but it does not mean that you should not be reading them. And it does not mean that you should not be converting those Chinese financial management reports into a format that shows the true reflection of your organization on that date. So it is very common for companies in China to have two sets of financial management reports. One that is submitted to the tax bureaus based on Fapiao accounting, and one that is for internal use, but is based on an accrual system that gives you the true reflection of your business. Okay? If you don't have those two documents and you don't analyze those two documents, honestly, I do not understand how you can make a decision on how to either pivot your business, make a decision on cost control, make a decision on new revenue line items, new product launches, new service launches, on eliminating products that are failing in the market, eliminating services that just might not be beneficial, analyzing then your marketing campaigns around those changes that are being made. I do not understand how decisions can be made if you don't have these two pertinent financial documents on hand, and that you don't sit with your accountant on a monthly basis to review them. It boggles my mind, all right? And the only thing that I can say to this is laziness. It's absolute laziness. So a system that we've created, and that I hope that I really encourage everybody to create within their own organization, is, especially when you're in the startup phase, but now even if you're an experienced China hand, is to say, right, I have a deadline where the Chinese financial management reports need to be submitted to me. We'll give 3 to 4 days to do the conversion into the accrual financial management reports. And I want to have a sit down on the 25th of every month to review those. And I go line item by line item. Now, obviously, years down the line, I have a month-to-month very clear picture of what's going on in my organization. I don't go line item by line item anymore. It's more, I look at the key line items, because obviously I do it based on my budgeting as well, where I then want explanations for certain things. And, I use my accounting team, I use my finance person to sit with, but then I involve other team members to come in because they're the ones that have to give the explanations on the results, right? Whether that's sales, whether that's my team that's handling partnerships, whatever it might be, okay? But number blindness, again, it's because of my profession and I see it daily. People don't have the right figures in front of them. And if you feel like you're in this situation, please go and reflect on my webinar from Wednesday. It's up on the YouTube channel now. And it will give you insights and tips on how to create a system process that works for you. All right. But having that finance person on board is fundamental. Now, just relating to the previous reason, which was all about insufficient care when hiring, right? When people are building up their own in-house finance team, they don't look at language. Accounting is already a department where there's a lot of technical vocabulary that is used. When you're going into the Chinese market, you're going to be learning a lot of new technical vocabulary in relation to VAT, fapiaos. You need to be able to have an accountant that can communicate with you sufficiently enough to explain you things. And if you don't have that person on board, I was joking yesterday that, you know, I'm 17 years in the market. I still explain VAT to my management every single month. Okay, because they're understanding, they're not on the ground. So they can't really see what's happening with fapiaos and how things are booked and the explanations behind it. So I repeat myself every single month. And then it's like, oh yeah, click, but they forget it for the previous month, which is fine. But you're gonna have to imagine that that's gonna happen in your dynamic. Your CFO in the headquarters is not going to understand how VAT works in China. It's gonna boggle his mind, okay? And he will want explanations on that every single month. There are new tax regulations currently in China due to COVID, due to the economic crisis. And if you're not up to date on what those profits tax laws are, you know, how can you benefit from them? How can you know about them? You're going to see very big differentials in your profits tax liability amounts because it's gone lower, all right? So you need somebody on the ground who can explain these things to you on a monthly basis, right? So number blindness is also key. Reason number 5 for companies hitting roadblocks is market assumptions. We all know this. Whenever you're going into a new jurisdiction, it doesn't have to be China, it can also be Brazil, India, Russia, it can be Germany, it can be wherever. You need to know your market. And once you do know your market, you have an understanding of route to market. You have an understanding of how you're going to be successful. You've probably done your competitor benchmarking. You know what local competitors are, that you know what foreign competitors are, all right? And you know what they're doing differently from you. You know what products they're selling. Now, generally speaking, companies that may not have very large budgets, they do their data mining at the pre-investment stage, which is typical because that's going to help you to create your strategy for the Chinese market. But data mining about your market is something that needs to be done continuously in China because the market changes rapidly, okay? There are thousands, if not millions of companies that are looking to go into the Chinese market. If you don't maintain yourself about your competitor benchmarking, you're gonna be lost, okay? So maintaining your market assumptions and doing continuous data mining is critical for your business. And the minute that people start forgetting to do that, you have a loss of what's going on in the market, all right? So it is fundamental that you maintain that. Don't do it just once, put it in a drawer and forget about it. You've got to continuously do that market research. And I just also want to highlight market research can come in a variety of different ways because if you are more well established in the market, use your clientele as companies or individuals that can help you understand the market assumptions. So, you know, I have a client who currently is going through a project of visiting over 250 of his clients. They're making it a goal for 2021 to actually meet them on site, face-to-face, to discuss their service level, their products. Are there any other products that they need? What are generally their needs in this sphere that they are in? All right, so use your clientele as well as a tool. Reason number 6 is control freak leadership. So again, this comes to a story that I was saying yesterday about my mistake, which stemmed from having my first employee being a bad egg, me terminating her, and then me going into a control freak leadership where I limited the trust. I had limited trust to the employees that I was hiring because I had been burned. And what this caused was the fact that I felt very alone, and I was not sharing the vision of the company with the employees. I was not sharing the goals, the objectives. I was limiting as much detail as possible to share, which was completely wrong. Because how do you expect to grow if you don't utilize your employees to help you grow? All right. You need to be able to empower your team in China and to encourage their activity, to encourage their success in order for them to gain confidence to be able to proactively say to you, I've got an idea. I have a new process that I want to revamp to make it more efficient, whatever it might be. All right. So we've all, as foreign individuals, there are situations in China where we will get burned, where we'll stop trusting people. Yesterday, I was talking with a friend of mine over lunch about this very unique experience that he had in China, where basically the foreign GM and the national sales manager had set up a separate entity to compete, and were using the funds of that company to set this organization up. And when they went through the termination process for these two individuals, my friend was saying, I was in this office and I just did not know who to trust. I had been so burned by that experience of terminating those two individuals. I didn't know if I could trust my finance person. I didn't know if I could trust my production manager. I did not know if I could trust our technical service guys. I really, for 2 months after that termination, I did not know who to trust. And as a consequence, I was not sharing the vision of the company, which meant that for a period of actually 2 to 6 months after the termination of those two guys, they went through a turnover of employees because he himself just didn't know who to trust anymore. So they let go of key personnel, even if they weren't even involved in the story, just to have fresh blood and be able to trust again and empower the team to bring the company forward. And it took almost 1 year to revamp the company in order to be able to get back on a track of growth. So it is important to empower your staff. It is important to involve them in your business. But having that control freak leadership gets you nowhere. You've got to be able to delegate and involve your team in the decisions that you're making. Marketing bias is also critical. In January, we did a webinar series all about brand strategy for China. And obviously, everybody is on a different level of budget when they're thinking about marketing going into China. Branding and marketing is fundamental. You are a foreign investor going into the Chinese market. You have to have this expectation that people don't know who you are, or there are not enough people who know who you are. So you have to invest in branding and marketing in order to be able to become a big hitter. I call it in this slide a big hitter, to become that big hitter, to become known in the market for your product, for your service. No point keeping a low profile, right? So there is a marketing bias in terms of the amount of time that is involved in these campaigns, the amount of resources that are needed to implement and execute these campaigns, and there is a bias on the budget. People make the assumption they have to have large volumes of capital to really have this amazing campaign. You don't. I encourage everybody to reflect back on our webinars from January about brand strategy. In one webinar, there's actually a media agency who was highlighting the budgets. And it's not shocking amounts, guys. Okay, but you just have to have that amount available as a minimum to be able to go into the market. So I think the minimum that he was saying was, if you are B2B, you're looking at a minimum of about 20,000 euros annually to have a solid campaign to start off becoming a big hitter, right? Because you're not going to become a big hitter overnight. You're not going to have a huge profile overnight. It's going to take time to build these campaigns, to build content, to try out differing marketing campaigns, different social media platforms, etc. But again, you need to have a proper strategy behind that. Reason number 8 is all about cultural diversity. And Manfred yesterday I threw away the piece of paper, but I did put it into my own LinkedIn account, had this beautiful saying, which was something to the effect of, in China, Chinese culture can eat the Chinese strategy for breakfast, right? And basically what he was highlighting with that is don't underestimate the cultural aspect around doing business in China, okay? So 2020 has caused a lot of people to become quite racist about the Chinese market, to become quite racist about Asians in general, to become racist particularly about the Chinese. But even prior to 2020, there were some very old generation individuals that knew they had to go into the Chinese market, but didn't like that they had to. And so, you know, they were like, why should I change, right? As a business owner and entrepreneur, if I hadn't adapted myself to the Chinese market, I would not be who I am today, right? I embraced it. And I learned to love it. I mean, obviously, initially, there are certain things that put you off because it's not your culture. You know, do I like to eat certain foods in China? No, but I still do it because I know that it impresses everybody around the table when I try it, okay? There are these cultural aspects and nuances that can impact the relationship you have with your employees in China, the relationship you will have with your third parties in China, the relationship you'll have with your customers in China. So as a business owner, as a leader, as a member of the senior management of your own organization, do not underestimate the fact that you need to adapt yourself to the Chinese market. You need to be open to it. You need to embrace it. And if you don't do that, don't expect to get any respect from the people in your ecosystem because it just won't happen. People won't do favors for you. All right. You have to have that openness to the market. And this is something that, again, a lot of foreigners forget to do when going into the Chinese market. Reason number 9 is a lack of vision. And again, this all relates to the relationships that you're forming in the Chinese market, right? I say to my children on a daily basis, sharing is caring. Why am I not implementing that in my team? Why am I not implementing that with my customers? Why am I not implementing that with my suppliers or my logistics providers, right? You need to be able to create a collective vision in China in order to be able to move forward. It is impossible to grow in China if you don't share this collective vision. Yesterday, we were highlighting, again, very much the communication issues that arise between China subsidiary and headquarter and the dynamic that is there. There are many instances where the strategy that both offices have are, you know, everybody wants to make money. That's the common goal. But how to make that money is not always shared. And sometimes it comes from the head office. Sometimes it comes from China because they know they'll get blocked by the head office and they just want to take action and get to that goal. So it's a very, it requires a lot of fine tuning on how to create that dynamic. But the first thing you have to realize is that you need to create a vision amongst your team members in China. Okay, you have to have that shared vision. You also then need to share that vision with your head office to make sure that they are also participating in the key core functions that are going to help your team on the ground move forward. Okay, but a lack of vision can be something that is a roadblock to the growth that you're trying to achieve in the Chinese market. And reason number 10 is fear. And again, this stems from the fact that you're not looking to adapt or you want to have too much involvement, too little involvement. There's this fear in the Chinese market of failure, okay? And I think Jürgen was saying in yesterday's presentation that for him, the one thing that he learned in China was flexibility, meaning take away the fear, realize you're going to make mistakes and that you're going to learn from those mistakes. But as long as I make those mistakes, learn them quickly, and then recalibrate and start again, you're going to move forward. Okay. The only way to eliminate as much fear as possible is to build your ecosystem, okay? And you need to know what that ecosystem of individuals is. Is it a lawyer? Is it an accountant? Is it a media agency? Is it hiring a business development person, a sales manager? Is it having technical staff on the ground? What is that ecosystem for your organization? Okay, again, the fear stems from the fact that you think you have to do everything yourself. That's not the case, all right? The case is you're going to have an ecosystem of individuals on the ground that are going to help you to push forward and grow your business, okay? They're going to help you to eliminate that fear. They're going to help you to have transparency. They're going to show you clarity. They're going to keep you accountable for moving forward in the Chinese market, all right? But fear is probably the biggest item on the agenda right now, particularly because of COVID, right? Everybody wants to make sure that their head office survives throughout this economic crisis. They want to maintain the existing employees. They don't want to let people go. So green lighting projects for China is quite difficult because they're starting to realize the amount of resources, investment that's needed. But if you realize who is in your ecosystem and how they can give you the information you need to realize that there's not too much you have to actually do, or there's not too much capital you have to invest, it's going to help you to move forward. All right. So those are the 10 fears. I'm just, we've got a little bit of time. So before I do that, I just want to highlight what they are again. Fear, lack of vision, cultural diversity, marketing bias, control freak leadership, market assumptions, number blindness, insufficient care when hiring, too much or too little involvement in the detail, and refusal to adapt. Okay. Probably for me, what keeps me going and keeps me familiar with the Chinese market is the fact that my belief is knowledge is power. And I've learned this from the mistakes that I've made. If I would have known XYZ, then I would have done it differently, right? And it's always good to preach that after a mistake has happened. But the reality is, the more you know, the more leverage you're going to have in the Chinese market. So the more you listen to war stories and learn from the market, from your people, from your advisors, the greater success you will have in the market, okay? So I want you all to be aware of that. You're on here today, again, to learn, to be educated, but continue your education in other areas too. Again, whether that's with third parties, with whomever, right? With competitors, with just other peers, right? Learning from people's stories, learning what they've done, what mistakes they've done will help you in knowing how to tackle the Chinese market. So maintain that level of education. It is fundamental. And I want you all to ask yourself the following. Okay, do you think you have, as a leader, what it takes to go into China, to grow in China, right? What ingredients do you think you need within your organization to be able to grow? I've listed 5 of mine, okay? Because these are the 5 that I think are critical for our company and our business. I guess you could say it's our philosophy. It's vision. We have a vision to grow in China, and we have a business model on how to do that. We have passion. I love China. I love talking about China. Like I said, I embrace the culture. And now not being there, I miss it a lot, okay? You've got to be passionate. There has to be no negative mindset about China. You've got to walk the talk, meaning action. Don't just analyze, analyze, analyze. Execute, take action, walk the talk. Communication, fundamental. And I mean this in terms of every area of your business. Communication with HQ, communication with China team, communication with third parties is fundamental. And the last is courage. It's courageous to go into China, especially in today's day, right? We are in 2021. We've just gone through a pandemic. The economy is not doing well. You want to go into the Chinese market, it is courageous right now for you to do it. I believe it is the growth market out there right now. I think it is the perfect timing to go, but it still does take courage to go, okay? And probably a little bit of convincing to other members of your senior team, right? But I want you to analyze, or what I'd love for you to take away from today is knowing what ingredients do you need to kick this off, to grow your company, to avoid obstacles in the future. What do your senior managers, or what does the owner of your business need? What do you need from them to push this forward? Okay. Analyzing that kind of puts you then also in a positive vibe, right? Of pushing things forward, of executing, of walking the talk. But I think these are just 5 fundamental ingredients that anybody would really need. But they are, for us, our ethos in terms of moving forward. Just a nice little, to finish off today, a quote by Sun Tzu about a leader leads by example and not by force. Again, you know, refusal to adapt, fear, marketing bias. You know, let me relate it to my children. My children, whenever I ask them to do something, I was like, no, 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 no. Right? This negative attitude will not work in China. You need to be a leader that's like, yes, we are going to China. I'm passionate about it. It's going to work. You only want to hear positive things coming out of that person's mouth, right? And you need to be the example to lead that team and show how things should be done, right? And if you feel the owner of the company is doing something wrong, vocalize that, right? Make sure they change themselves to be able to cater to the market. So again, I always ask after our webinars, what was your biggest takeaway from today? If you want to jot that down, super helpful for me. I'm just going to type into the chat box again, ways for you to reach out to me. So you have that on hand. And there we go. And if you guys have any questions, please start inserting them into the chat box. That would be very helpful. Because we do have plenty of time for a Q&A. Unfortunately, Stephen had to drop off because of a work call. Irina, Jihong, if you've got any questions, just type them away. If not, then I just want to let you know that on May 11th, we've got our China Incorporation Blueprint webinar, which is all about the 9 key decisions you've got to make when incorporating your company in China. And then our webinar series for May will be all around employing individuals in China. So we'll be looking at the key Chinese labor and employment law questions. We'll be looking at how work permits and residence visas can be obtained for foreigners in normal times as well as in COVID times. We'll be looking at personal income tax liability and how that's going to also change in January for foreigners, and social insurance obligations. We may have a 5th topic coming in shortly, but if you are interested in any of these webinars, they're already up on our website at woodburnglobal.com/events. I will type that in here as well. All right. So there's no questions that have come in. Irina, it's my pleasure. Thank you all for joining me. Some of, it's been, I think you've joined in and out on a couple of these webinars. Thanks for joining me. It's always interesting for me to see that on topics that are related to actual companies that are already established in China, we always get very, very small amounts of individuals because they think that everything is perfect when it's actually not. Our tendency is always to get more people on when it's related to market entry or brand strategy or things like that. Just for you all to get updated, May will be about employing individuals in China. And then in June, we're going to have a whole week purely on e-commerce. So definitely stay tuned for that as well. I wish you a really great weekend. Take care. See you soon at our future webinars. And bye.